Hello and welcome to the trade setup. In this video we are looking at HIMS and HERS health. It is time for another update, and today we witness a strong shift in the probabilities for continuation to higher prices on this chart due to the failure to hold the area of support we highlighted here down to the $30 level. We were mentioning that a sustained break below this point, the 78.6% retracement, would be a strong signal that the probabilities for this pattern to succeed in forming will have reduced significantly, and that we should be prepared for an even wider failure, likely taking us to prices even below the beginning of this entire trend. Now, for invalidation of this idea, I would need to see a break below the beginning of the wave A, that is at the $24 level. Today we will be talking about the structure we can expect to form, especially now that we have seen a more substantial break, as well as the likely turn points within this chart, within this area. But before we go into all those details, I would like to go quickly through the larger time frame for any of you who might be new. And here we have been tracking this idea of a potential leading diagonal. We had a wave 1 complete, we had a wave 2 complete, and we were looking to form the third wave to the upside. Within this wave 3, we were assuming we had already built the wave A, B, and we would have been looking for the wave C to unfold to the upside. And as you may know, within the wave C, we always expect to build a 5-wave pattern, and this was being tracked for us in an ending diagonal. So, within this structure, we have been tracking this idea of an A, B, C pattern, and from the large time frame perspective, this chart was not very interesting to us. We tend to avoid diagonal structures as they are much more difficult patterns and they are much more unpredictable. But since within a smaller time frame, in this initial wave A to the upside, we had a 5-wave structure, we were looking with high probabilities for a 3-wave correction into the area of support and a reversal to form to take us to even higher prices. This area of support ended at the 78.6% retracement, and normally we can allow this structure to dip below that last level of support. But if it forms a sustained break, which it has already, we can even see that within this pattern we have created a resistance level at that mark, and we got rejected a couple of times when we attempted to last push into it within this area. And this strongly indicates that this structure is very likely to even get invalidated, and that we would need to track a different scenario, a different interpretation. Now, that is why I will need today to bring out a different interpretation here on the chart. So we can actually even hide this yellow scenario to have more clarity of this idea in orange, where we have already been tracking an extension within this orange interpretation. So we have here an A wave to the upside instead. We track a wave B correction here, and I'm looking for a potential wave C to form to the upside. I wouldn't recommend focusing too much on the count because this structure is extremely volatile. It is not going to abide necessarily by a specific count. I had even shown you already a different count in the previous video to provide some context for a potential area of support we would track for continuation higher. It would be the same area of support as it is within this count, which is why it doesn't matter exactly to me, and I don't believe it should matter to us what count we are tracking exactly, because we will have an area of support defined for continuation to higher prices. But since this is a diagonal structure, it's not going to be a high probability area of support. For a high probability area, we need an initial 5-wave move to the upside. That is why this has been an interesting potential for us, even though it didn't hold. Sometimes it just doesn't work out and it happens, and I never provided a guarantee that this will succeed, but I did provide you a highly relevant area of support that would tell us very early when we should expect this structure to not manage to extend to higher prices. It has given us that signal. We can cut losses much earlier, and we don't necessarily need to wait to extend all the way down to the correction. Now, can I confirm that this structure will not manage to extend to higher prices directly? Of course not, but within the Elliott Wave strategy, we can determine high probability areas and high probability interpretations that would give us better chances and aid us in eliminating emotions. Now, for this idea of continuation higher, we are still tracking an ending diagonal within this wave C in orange. So what I have here within the third wave would instead be an A wave up, and I would be looking for a B wave correction to unfold. Within this idea, I would track the levels of support between the $38 all the way down to the $19.4. Since we have already pushed quite deep and we have even touched previously the 61.8% retracement, I wouldn't necessarily want to crowd the chart too much, so I will only keep here the 61.8% retracement and the 78.6% retracement. I would strongly expect that we at least get once again into this area where we have already formed this structural support. So you see, when we form such swing lows and create massive pushes to the upside, those do tend to act as support afterwards for follow-up encounters of these levels. Yeah, we actually even have an example here. We formed here a higher low, we pushed higher, we retraced once again, we pushed exactly into those levels, into this area, and we have formed a significant bottom once again, and we retraced back to higher prices. Now, we don't necessarily need to focus too much on the larger time frame. I'm still eyeing this structure that is expected to build this extension lower, and I have already been tracking this scenario in orange, where we have been looking at this instead as a 1-2 setup, instead of what we were tracking within this yellow interpretation in an A, B, C structure to the downside. We were looking with high probabilities for this to extend in our correction. It did succeed. It didn't stop to consider the area of support and start the reversal, but yeah, we can now track the extension where I would once again look for the area of resistance for a potential wave 4 as the primary threat to lower prices on this chart. Now, clearly we are still extending in this wave 3, and I do have an internal count that I want to show you today. But before that, I want to adjust this area of resistance. So in the previous video, we were looking already for a possible bottom within the wave 3. We can already look for a bottom once again. I won't necessarily deal too much with the small time frame in considering should I even look for this larger area of resistance. Well, yeah, I should, because we could form a bottom at any point. You see, oftentimes, even if we break the areas of support, we do tend to form significant reversals. Breaking the area of support for our yellow interpretation doesn't mean that we will have a straight line into the deeper levels in orange, but it means that we should expect this structure to continue to lower prices even if we form a recovery. Now, I'm watching for resistance at the levels between the $33 all the way up to the $41.9. A break above the 50% retracement would be actually a strong signal that a more significant bottom is in place and that maybe even the idea of an A, B, C pattern could be salvaged. Remember, for a formal invalidation, I would need to see a break below the beginning of this wave A. That is here at the $24 level. We have not done this yet, although the price structure is strongly suggesting to us this will be the case. Now, in this smaller time frame, I'm still tracking the same pattern as we have been in the previous videos. I'm looking for an impulse within this wave 3. Other structures could work out. This is what I prefer to track at the moment, and within it we have probably something like a 1, 2, 3, 4th, and the 5th unfolding. Within this 5th wave, I'm looking for an ending diagonal where I could consider this to be something like 1, 2, 3, 4th, and the 5th. Within this 5th wave, I would only need to build an A, B, C pattern to consider this structure complete. In the previous video, I did provide you relevant levels of support to manage to build a more reliable structure within this small time frame. We have failed to hold them. Here we have an example. We have fallen below the area of support. We created a recovery, even back above it. We nearly formed a new high, but ultimately we have failed to hold it and retraced back to even deeper levels. Now, this structure is not really useful anymore, so we can at least hide it for now. And within this structure, as I was mentioning, this is a 5th wave part of an ending diagonal. This is not the only count possible within this structure, but on the larger time frame, we do see some divergences here on the 4-hour time frame and even on the daily time frame here. So we have this low within our wave 3, lowest point on the RSI. We formed on the price chart a lower low within this 5th wave. We formed a slightly higher low on the RSI. We formed yet another lower low on the chart. We have a slightly higher low on the RSI. So at least from a larger time frame perspective, it is decently apparent to us that we would be within some sort of a 5th wave in this area, Although the exact structure in this pattern I cannot guarantee, many counts could actually work out. I could even see this be still an extension of the wave 3, and then we build here a wave 4 and a 5th wave. But personally, I don't think we should focus too much on the exact count, because we will have the levels of resistance to watch. The levels that would tell us, if broken, that a more significant bottom would be in place and that we would have a potentially more bullish count that we could track. This is currently not the case, and within this pattern, I'm focusing specifically on a potential impulse within this wave C. So we have here this possible series of 1-2 setups within this area, and even here potential another 1-2 setup, and a third wave that could have formed a more significant bottom. Could have, we don't have any signal that this is the case, but I will assume for the sake of simplicity that this would be a more significant bottom within the wave 3. And for this, I can provide you an area of resistance for a follow-up correction in a wave 4. In this case, we would be watching the levels all the way up to the 50% retracement at the $28.5 level. If we extend lower within the wave 3, this area of resistance would need to come along with it, yeah? If we break above this last level of resistance for the supposed wave 4, we would need to be tracking a different interpretation, and it would have implications that this pattern, this structure, would be more likely to form a bottom sooner rather than later, because you see, within this wave C, since we are tracking an impulse to complete this entire structure, I would need to complete here a 4th and a 5th. This would make this wave 3 complete. I would then need another 4th, 5th pattern. This would make this even larger wave 3 complete, and then another 4-5 pattern to complete the entire wave C. Every single wave has these subdivisions, and as of now, we have a triple 1-2 setup within this area, and we have a potential wave 3 in place. Now, if we want, we could be looking even for an ideal target for this supposed wave C. This is assuming within this wave A we have the bottom here, and we would have the wave B top here. The ideal target would be at the $23.8 level, the 100% extension of the wave A. Keep in mind, this is an ideal target. It doesn't need to get there and it doesn't need to stop there, but it is also very much in line with our stronger structural support that we have in this area, yeah? We have mentioned earlier in the video the $24 level being the beginning of this entire uptrend. I strongly believe that if we are to extend in this wave 3 alone into that area, we should see a more significant bounce. So for now, we don't have much else to add. I want to do a quick recap. So here on this chart, we are focusing on the orange interpretation. The yellow scenario is still technically possible. We are still looking here for a potential wave C to occur, but it is not going to be the primary scenario anymore, as we have failed to hold the area of support. If we break below the beginning of this wave A, this scenario would have failed completely, and we would remove it from the chart. We would still be able to track a potential leading diagonal to the upside in the larger time frame, but it would require a completely different count within our larger wave 3. And for now, these are the levels. This is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.